looking for the sports gem.
Alrighty. Well, this video will be a Grinding Green Tuesday day trading recap. The reason it was a Grinding Green Tuesday is because we were fighting the SPY. We were trying to do long trades as the SPY, the SPY, proxy for the S&P 500, was just selling off, slowly zigzagging down in a weird, awkward cuck formation. However, now that it's making lower lows with no follow-through, it actually might be bullish because the bears aren't getting much follow-through to the downside and every low is being bought. These are generally bullish and they generally break to the upside. So keep an eye out for SPY. Our first trade in the day was on Ddog, and if you recall yesterday's video, we mentioned that there's this nice good bull flag coming into the end of the day, which generally leads to a nice good pop into the after hours session and into the next day. Well, we didn't pop after hours, but this morning we had a really good rip up, and I wanted to go long on Ddog over 113, but I just couldn't get a fill. Ddog ripped up, crazy candle, almost a 2% candle in 1 minute, but then Ddog had the pullback. And normally you can buy these pullbacks, but it's a little bit risky because you can give back the entire move. It can completely sell off. So I like to wait to show that buyers are still stepping into the stock, and that just happened. So we had this nice healthy retracement. It's called a bull pullback, as long as it doesn't retrace more than like 50 to 75% of the move. So what I mean by that is from low to high, as long as the move does not go more than 50% or 70%. So here's the 50% mark. There's like the 61.8%. Here's the 78.6. As long as we're above here, that makes it viable to buy, and it's a bull pullback. So what we did is we went ahead and went long on Ddog just over 114.50, which also represents the old all-time high. So that's why it's this nice good green line. That's right here. We double topped there on Friday. And then on Monday, we had this good sell-off. It was in the game plan to go long at 110, so that was given all the way from Sunday. So Ddog's still pushing up right now. But our first entry was at 114.50, and we got this nice good extended move. And I took my contract off right at about 115.80, and I did have a second contract that I was swing trading, and that was holding through. And we happened to take that off at about 116.50 on our swing trade, and that was a nice solid revenue trade on Ddog. The day trade on Ddog was 250 into 310, and then our swing trade was 310 into 420. So $170 total on Ddog. But as we later pushed into the day, we started making higher highs, but with not a lot of follow through. So similar to talking about a bull wedge, this is actually a bear wedge. And once we made this higher high with no follow through, I went ahead and took profits on my call debit spreads. CRWD was our next trade of the day, and Crowd was pushing up really nicely. And if you take a look at the daily chart, we're making higher lows every single day, and we're coming up to a flat top resistance, which is the old all-time high of about 153. So as we started to break up over 150 and started really pushing, it was on my radar to get long. I really should have been long all the way from 149.60, so over 150, but I didn't really get it towards my attention until we really started pushing up. Could have bought over 150.127, but still missed that trade. But then we started to really zigzag down, and right here we started to put in a pivot right at the former breakout area, so we know we have some support here, and we got this nice good hammer candle. So I went ahead and went long and bought Crowdstrike just over 150.150 with my stop loss just below 151, 150.75, the tail of the hammer candle. We got a nice push up, was up about $40, $50, did not take it. Then we started to zigzag. Then we got this nice breakout of this nice good wedge bull pattern. You know, this flag, here's our move up, that's the flag. This is the counter trend consolidation. And right over here, we started to break out and over starting getting near to the old all-time high. So we went ahead and added to Crowd. And our target was just about the 154 area. However, because we are so extended and because the SPY was selling off, as we mentioned earlier in the video, we're kind of fighting the trend. So you basically want to be able to take profits early or trail it really tightly. So that's exactly what we did. We got a nice push up on Crowd, was up about $150, but didn't take it. We're looking for the 154. At this point in time, it was still good. I slowly trailed up my stop, and this red candle tagged out my stop, and that was for a nice good revenue trade on the first portion of $62. So then on the second contract, now that I've taken a partial, I can really let it start to go through and let the position work for me, knowing that even if I give back profits, I still have green to work with. So Crowd started really pushing up, and then we started to put in this triangle pattern, and the triangle pattern did break bearish. So I really should have been out just over 152.84, but again, I wanted to give it a lot of wiggle room. And then crowd just really started selling off. I was trying to get out in the 152 area, couldn't get filled. Eventually, I just hit the bid and got filled, and I actually took a loss on my second contract of $12. So net on crowd, we ended up making about $50 profit on crowd. Our last trade of the day was on Disney, and Disney played me like a fiddle. It was really all over the place. Right here in the morning, we had this nice good consolidation, and then we had the breakout over 130, so extra confirmation over a nice round whole number, nice consolidation, had a nice breakout. We went long right here, got an extremely fast push up. We were up like $40, $50. We didn't take our profits because we were looking for about the 133 area, but then Disney started to really pull down, and then it started to hit the support of 129.40, hit the support, eventually broke down. I really wanted to give it to 129 at that point, and boom, here came this fat red candle. Tagged me out with fat slippage, and that was for an annoying expense trade of minus $64. So from going up 50 to minus 64, never fun. But then Disney started to really consolidate and start to prove itself that it really wanted to go higher. And I was buying a little bit high up here, just over 130. We formed this nice move up, nice sideways consolidation, and then we popped. And this position, the second time around, was a lot more peaceful. We just put in a trail stop of about 60 cents. We got this nice push up, zigzagging, but then we formed a double top right at about the 130 area, and then we started to base out, and then we started to break down. And just underneath 130.80, we had to stop out of that trade, and that was for a small little revenue trade of $57, but net minus 64 plus 57. Our total profit and loss is minus $7 on Disney. So it was a crazy day trading today. Definitely a grind. We're definitely fighting the SPY, especially with the whippiness and choppiness of it. Moving forward, SPY just needs a little bit more time to consolidate. SPY, it's unlikely to just bust through the old all-time highs from this point. There will definitely be some resistance in the 156 area. We might even sell off all the way to like 347 area. So watch out for SPY. Keep the swing trades light. This is an interesting type of market. So let me know, what did you trade today? What are you looking for? What are you swing trading in? What are you investing in? Let me know in the comments below. Alrighty, thanks for tuning in. See ya.